How is everyone doing today? I am joining you from a hotel room off the hotel Wi-Fi. So I hope that everything is okay on my end. It says excellent, so that should mean that you guys can see and hear me okay. But as you are jumping on here, be sure to say hello in the chat and let me know that you can see and hear everything okay. Let me just check some things. Yeah, I think we're good. So I am in sunny Gold Coast at the moment, just checking out some places for my friend who's moving up here. And had a bit of a dramatic day on the chart yesterday, didn't we? So we're going to talk about that, what we're expecting next. I'm going to show you some interesting tea about crypto. Who have we got here? Good morning, Alicia. What's up, Lucky? Hello, Talal. Thank you, Adam. Working fine. Everything is good. Hey, what's up, Ryan? Carl. Hey, Toyin. How you doing? Jason's back in the house. I need to reply to your message, Jason. I will do that soon. I did read it. And side note, yes, I am hoping to be at Bitcoin Miami. It's on my list, so fingers crossed. Island entered the chat. What's up, my friend? Okay, let's get into this. I didn't mean to be on this screen, first of all, because I wanted this to be a surprise, but we're here. Anyway, let's have a look at what is just going on in general. Big overlook view before we zoom in on anything. Just Bitcoin, Ethereum on the right-hand side. Sorry, excuse me. On the left-hand side there have not actually entered my higher time frame area of interest on the... Come here, mouse. On the spot charts, as we can see down here, this was worst case scenario for a recovery of this candle here. Kind of good that we aren't there yet, but we do have a full recovery of this vector here. Remembering that perpetual charts, futures charts will look different and will have different levels to spot charts. So just keep that in mind, that we may not hit exact. When it comes to the S&P and NASDAQ, so this one here is the S&P, two areas of interest marked from last week, and price has started making its way into that very large vector candle. I'm pretty sure we talked about this last week, that it's, at some point we're going to come back there, which I guess they decided to do, this week. Just tapped on the 50% line of that vector candle there. So this is an area where you look for a bounce or a breakthrough for further continuation to the downside. So it's good that we do have one current candle at that zone with a wick. What you want to see now, obviously it's way too early because it's 2 hours into this candle. That's the aircon that is blowing right on me. And I don't know where the remote is. I should have pre-planned this, but anyway, I'll do my best to try and stay away from it. Otherwise, I haven't coughed once since I've been in Gold Coast, so it's definitely when I'm cold that makes me cough. Are you charting on spot and enter on futures? No. I always chart and enter on futures, but when I have a big general look at what's going on in the market, I look at the spot charts. So we'll get to the futures charts in a second. But with this particular candle here for S&P, I want to see some kind of bullish candlestick reversal confirmation, either on this candle close or just over the next few candles, but we want to see price move out and away to the upside if this move to the downside is temporarily over. So it is at a level where we hope for a bounce. So that is one good sign. But, if we don't get that bullish candlestick as the final confirmation that, we're going to start heading to the upside, then look out for continuation down to the 37.50. But you'll know that if the candles, start looking super bearish. Probably NASDAQ is very similar. It says my streaming is just fair, so I'm doing my best. I don't have a lot of charge on my phone to be able to hotspot to do this live, so I'm doing my best on Wi-Fi, but for tomorrow's stream I will make sure my phone is charged. Complete mess right now. With the NASDAQ, let's have a look at this one. Same situation. So we've got a nice wick candle at the 50% line. Need to see if we're going to get that, the final confirmation of these bullish reversal candles. That's going to be really good. I'm bullish until the 23rd. Don't know about, or we'll talk about that. So there's that situation going on with those. Let's take a bigger look at Dixie now. And Dixie had come in, had 1, 2, 3 touches to a previous zone that we had marked from back here, which was, when was that? Around June 2022. So we have come back into that area. Now, from memory, we were talking last week about how we wanted a retracement into ideally the, what is this one? The 200 EMA, then continuation down. We didn't really get that retracement. We just kind of continued to bleed down. But the thing with the Dixie is, look how it's failing to get itself above the 50 EMA. If it does, it only is hanging out there for a very short period of time. So keep an eye on that, because what's going to give you an idea that Dixie may start to have at least some short-term recovery to the upside, which in turn won't be great for the market, is if it can get above and hold above the 50 EMA now. So it's good that we're seeing these rejections, but we actually want to continue to see them. So it's a very important one to watch out for. Now, when we go to Bitcoin, let's zoom in on this one. And I want to show you something on the higher time frames that is rather interesting to me. If we have a look at the daily, we spoke about... trying to remember what we last spoke about. I don't even bloody know. But I know that I did this update here in the Discord. So if you're not part of the Discord, come join us there, because this was a pretty key rejection where we couldn't make it to a full recovery of this vector candle right here from the 9th of November. And that was a fairly decent wick that rejected off that area. Actually, we did talk about this on YouTube. It's coming back to me now, that back when we initially had that breakdown here, when we broke the 18,450 range, and we were down here on these candles here, I had mentioned to you guys, be careful of when price eventually makes its way up there, there's going to be a lot of shorts waiting there, because traditional traders will see this as a support break, and they'll be waiting for a resistance flip. So when support breaks, they wait for support to turn into resistance. So they will automatically have shorts set here. And so once we reach that price again, we will probably initially reject. But what we need to watch for next is, will the market maker then come back in with stronger price action and push price to the upside? So that is what we need to watch for this week, because the first part of that has happened, but now we're waiting to see if the market maker is going to turn up and take that second attempt right through it and take out everyone who did short here and is probably going to hold on to it thinking this is a definite sign we're going to 12K. So just got to keep that in mind. But I wanted to show you, I think it's on the 8 hour. Let me just check. Yes, it was. So on the 8 hour, there was a couple of levels of liquidation that we have marked out. One was at 16,600, which we broke yesterday. And now the next one we have is at 16,150. And then we have the 15,770 region. Welcome to Queensland. No lockdowns here. Yeah, well, there's no lockdowns really anywhere anymore, is there? I think everybody's over that. Hello from the Philippines. Thank you for being here. So anyway, point being that we broke that 660, which was a full recovery of this vector candle right here. Now we've done that, meaning that the next one is down here, and we have a liquidation level. Sorry, did I say 16? Anyway, whatever. 16,150. We have a okay liquidation level, but the juicy decent one is at 15,770. If we were to get there, that would be a full recovery of this candle here. So that's definitely an area of interest to me. However, I'm prepared for price to turn around from basically now, and I'm going to explain that when we get down to the smaller time frames, but just keep these levels in mind in case what I'm about to say ends up not playing out. So number one, if we are to continue to bleed, these are our levels. We also have another level at 15,000. We still have that level at 13,300, right? So their worst case scenario. However, the subject of today's video is did the Santa rally already happen, or is it still coming? And that's what I'm going to get to in a second. But I wanted to also show you, was it the 6 hour? I wanted to show you something. 6 hours similar. So on the 8 hour and the 6 hour, we have that vector candle right there. So that is definitely a very key area. Right now, we do have a nice wick out of the zone. Could that be the stopping volume candle of a potential first side W on a smaller time frame? Probably. Like if we go down to the 1 hour, and zoom in on this when it decides to show up. Here we go. It's pretty clear to me that this is now the M form. It was a final damage M formation, which came on a news event. What was it? Was it FOMC last week? Whatever it was. We've had our breakdown. We've had board meetings in between. And then today could be the final push down. Here's the problem that you have and what I would watch for, number one. So now that we've broken down this level, that means we've broken the low of the week. So low of the week is like what traditional traders would call a support, except it's better. So, but it works in a similar way. If we break the low of the week, then we have to wait and see if the previous low of the week is going to turn into the next high of the week. So basically, again, support resistance flip. So what we need to wait for, if that was the final third push down and now we're going to have an uptrend, we need to make sure we can get back above the low of the week. That might mean that you enter a trade, because this here is starting to look like a left side W, right? So let me draw this out to you. If this was going to come down here and then create the right side W, the right side of the W, which is usually where I enter my trades, is going to be below the low of the week, which makes it a risky trade to enter. I don't know why I'm looking at the light instead of, I don't know what the fuck I'm doing. But anyway, that makes it a risky entry. But again, if you have good risk management, you can afford to take more aggressive trades like this from time to time, because if it does play out, it's probably going to end up being a very juicy trade. So the problem that we have right now is there's fairly high level short orders at 16,500 in trading light. Let's just see if they're still there. Yeah, it looks like they are. They could come down a bit. So see that level, that red level at 16,500, that's sitting there. However, without panicking, that could be to create the middle peak of the W, which would reject off the low of the week. So you have to make the call. Is that a rejection that's going to lead to more downside, in which case you would open a short position? Or do you think it's going to be the middle peak of the W that comes back to create a higher low, and then we have a short-term change in trend? Those are the decisions you have to make as a trader. For me, I wouldn't short. Like if I was looking for a short, hold on 1 second. If I was looking for a short position, we'd already had this move down and I'd missed it, I wouldn't short from here. I would just sit out until I felt the change of trend was coming, because I want to be in the start of the trend. I don't want to be jumping onto the tail end of a trend. So that would mean if I miss this short, I just got to sit out and be patient till we have a change in trend. And you have to decide if that's how you want to trade as well. So that being said, if we do come up to this 16.5, reject, as long as it doesn't look super harsh, which I don't think it will, but as long as it doesn't look like this would stop me from entering a trade. But if it kind of looked like this kind of cluster here that happened over here, and then we got a nice hammer or a nice railroad track or something that created a higher low, I would risk that entry, because my stop loss can be just under this wick here. And then, it's good. I've got good risk management. It's all fine. If it doesn't work out, no big deal. I'll just take the next one. I was wrong this time, So with that being said, I'm expecting a rejection around 16.5, but I need to then judge that rejection throughout the Asia session, or may take longer, who knows. But I need to judge what happens after we get that rejection at 16.5. Now, is there a chance that it will just break through and continue up? Yep, there's always that chance. And what would I do if that were the case? Well, that would mean that we have a V-shaped recovery instead, where price just goes here and breaks right through. No problem. Wait for a retest of the 50 EMA, and that's your entry. That would give you actually more confidence that we're going to change trend, for at least a small period of time. So those are two scenarios. But then the last one, if you are wanting to short, is that you're shorting at 16.5 because you think that the low of the week is going to turn into the high of the week and you believe we're going down much further. So there are your three options. But I also wanted to show you, wait, do we want to talk about this? We'll talk about that one in a second, but let's have a look at this very quickly. The other reason that I think, I'd rather wait. I don't want to short any further. I'd rather wait to see if change in trends are coming now, is just because of the liquidity above price. So just even having a look at these spikes out here, can you guys see them? Yeah. Having a look at these spikes out here are much, much larger than what is left below. So, again, it's just an easier target for the market maker to take price to the upside whilst people are feeling overly bearish right now. So that's another thing to keep in mind. In the heat maps, again, we know the 16.5, but we've also got this area of longs here between 16.1 and 16.200, which is already marked on the chart. So we've wicked into that zone one more time. Again, if we get up to 16.5 and reject, if we get that higher low, you want to be looking at your heat map orders again and see if those orders maybe move a little bit higher, and that gives you that higher low, and then bang, Bob's your uncle. Now, what does this mean for target? So obviously every area of imbalance above price becomes your target when the trend does change. So we're looking at this area here initially. Would be one target, which is between 17k to 17.5, coming back up into this zone if we get super bullish, which is between 17.8 to, let's say, 17.3-ish. And then finally, this level up here, this 19,800 liquidation level, it's still there. And we talked about this at the beginning of this month on this channel. It's still there. As long as it's there, it's a target. Just as much as 13.3 is still there, and 15,000 is still there. 19.8 is still there as well. So when we have a look at the heat maps, you can see here we've got a particularly large level at 18.6. What is this doing? 1 second, it's having a heart attack. But we still have the 19.8. Now, the thing is, the 18.6 is a much stronger level than the 19.8. So if we're going to get anywhere up close to 19.8, we have to break through the 18.6 first. So it could be that we go up to 18.6, reject, and then take the second attempt that pushes through to 19.8. And the reason why I'm not giving up on a potential Christmas rally, which I just think may be taking longer than what I initially thought, because I thought we would hit the 19.8 before the 23rd based on the astrology. I was wrong about that, but I don't think it's impossible to hit that number. It's either 18.6 or 19.8. I don't think it's impossible to hit that by the end of the year, and I'm going to explain to you why. Now, if we go to the options, max pain levels for what is available for the rest of the year, to very briefly describe it, because I don't want to take up too much of your time, but to very briefly describe what max pain is, it is when it's for options trading, and it's where if price were to expire at that number on the expiry time and date, that is where the most damage would be caused to both the calls and puts. So most people will basically expire worthless, and the market maker wins. So that's why it's called max pain, because both sides, people putting in calls, people putting in puts, both sides will not win, right? So, but the thing is, max pain is only relevant when the notional value of everything that is like in those positions is a very high number. So if you have a look here, there are options that expire all the time, right? And also the max pain number can change, and that's why you have to monitor it basically daily as you get closer to expiry dates. So the thing is, like, if you were to look at it today, for example, December 20, you can see here it says the max pain is 16,750. Now, it doesn't have to expire at that price also, just to be clear. It has to expire, for Bitcoin in particular, it's around about $1,000 either side of that price will still cause the max pain, right? So if you have a look at that, Bitcoin's price today is at 16,480 right now. So it would cause max pain if we were to close options today, which they close around the UK session open. That would cause max pain today. However, the reason that today's max pain doesn't matter is because when you come down and have a look at the notional value, it's 17.61 million. That's not really, that's kind of coincidental. If they get hurt today, it doesn't really matter. That's not really a number where the market maker really wants to drive price to hurt people so that they can collect. But what we do want to pay attention to is when we see that notional value on things that are expiring, we want to see that get up into the billions. So now when I go to the 21st, and you can see down here the notional value is 10.43, 23rd the notional value is 224 million. So all of those ones so far, not that big a deal. Max pain is at 17,000 for that one, who cares? But now when we go to December 30, have a look at this. The notional value is 2.27 billion and the max pain price is $19,000. Now you combine that 19,000, you know it's 2 billion, it's worth the market maker coming for, and we know they've got that level of a high level of liquidity at high level of what is the word? People's liquidation levels. We know we've got that at 19,800. So is it possible that Bitcoin can rally $3,600 in 10 days? If you don't think that's possible for Bitcoin, then you haven't been paying attention. So I'm not saying it is going to happen. This is something that I want to monitor on this channel between now and the next 10 days. See if it works out that way. But it may mean that my initial target of 23rd of December to hit that is obviously out. We're not going to hit it by then, but it doesn't mean that it's out and we're just going down now. So I'm definitely open to looking for long positions as long as I can find them in the right spot, for the simple fact that if I can get in on a second side W, with everything else playing out, sorry, so I can see my 3 levels. I've hit a high level of liquidations. It's an area that makes sense. I've hit a vector candle, which is pretty much where the price is right now. If I can have all of those conditions met and find a good looking W formation, then for me, it's worth taking a chance on, even if I get stopped out 2-3 times before I get it right. For me, as long as you have the right risk management, it really shouldn't matter. But it's worth me trying to get that for the fact that I can see this happening potentially December 30. Now, obviously, the price action between now and then might tell me a total different story. For example, if we completely fail this level right now, we break that 15,770, then it's not going to be likely that if we get below 15,770, it's not going to be likely that we get to 19.8 by the 30th of December, right? So it's conditional upon this area holding. And we get a nice W formation. For me, it's worth taking that chance. And like I said to you before, if you believe we're going down further, you'd be looking for shorts at 16.5 with a rejection there to take down. For me, that option is not my play and it's not worth it. If that were to happen, I'd rather sit out and wait. For me, the play is looking for the W when the right W presents itself. So I hope that makes sense. Anthony, I saw that question based on the astrology. I went through that on previous videos, so I won't go into it today. But that's basically the moral of the story. And what else did I want to show you? Here. So with Ethereum, similar. So Ethereum took out 2 liquidation levels. So we took out this one. Hold on, let me just get this off my chart. And we took out this one too. And Ethereum looks like there's a potential that it's created a final damage W where it is right now, because that was the low of the week there at 11.55 and we only just wicked below it. So there is a possibility that this here is a final damage W. If you're not already in on it, if you're not already taking the chance on it, then you're just waiting for the 50 to break and retest, and that's your second chance entry from there. So that's really all I have to say today. Again, before you enter any long positions, just flick over to the Dixie and make sure that it's continuing to look weak, because if that gets any strength in it and starts holding above the 50 EMA, then our long positions just really don't have much of a chance. So Lucky said, do you reckon we got a final damage W already on ETH? There you go. I answered the question for you before I even saw it. Anthony says, I agree with you, Annie. You can't ever be fully bullish or bearish, or else you'll never see the bullish aspect of the market if you're short. Same with you. 100%. Like, just trade what you see. Don't get tied into. There's so much FUD out at the moment. The Binance, what's that? I don't even know what it's called because I don't listen. That other thing that's meant to go down because of FTX. There's so much FUD out at the moment, and that's what they do, is they bring in all the bad news right before they're about to turn price around, because they know that you will trade off emotion. So we don't do that in this channel. We're cold-hearted hoes, and we just trade what we see. Okay. All right, guys, I'm going to go because I have a facial now, which is my favorite thing to do in the whole world. But enjoy your day, play it safe, and yeah, just, second leg W's, great entry if you're an aggressive trader, as long as you have good risk management and stop losses in place. If you want to be conservative, break over 50 EMA, wait for retest. Very, very simple. Love you guys. I will see you tomorrow. Be sure to smash that like button if you enjoyed this video, and even maybe if you didn't, just do it. But also, I'm so close to 13k subs, and I don't want to hit 13k because it's an unlucky number. So if I get to 13k, we have to rush to 14. Okay, that's our deal. All right, guys, I'm going to see you guys tomorrow. Enjoy your day, and how the fuck do I get my mouse over here? Okay, there we go. Good luck with your trading.